Hey everybody, this is Jim at FreeChartVideos.com, where we use time-honored techniques to understand modern markets. This video is for educational purposes only. Please do not use it as any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. I'm not a licensed professional, just a guy that draws lines on charts. So let's look at the S&P. Okay, we are looking at a 15-minute chart, and I'm going to get rid of the volume down there because there's nothing there. And I want to remind you that we've been keeping our eyes on this little inverted head and shoulders pattern that formed after the recent, actually the high. Let's go to a 30-minute chart. Never mind. Here's the high that we made for the year, and actually for not just the year, but for a couple years in the S&P around 1340, whatever, low 1340s. My memory's not that good. And when we hit this high, we then formed what appeared to be some type of either a consolidation or a reversal. We didn't know at the time. A triangle. That triangle had this height from the first reactive move in the pattern. When it broke down, we identified the triangle minimum target at about 1256. It exceeded that briefly, getting down below 1250 just for a bit, and that's when this small inverse head and shoulders pattern formed, signaling that this should be at least a short-term bottom. Here's the breakout from that pattern that then pulled back a little bit deeper than maybe one would expect, but it pulled back and then started taking off. We got over this green line that was over these various peaks and also this little channel here. Didn't even pull back to that. It just blew through that. Then bounced off. Well, before we bounced off this red line, remember this line is the top of that triangle. This line is the extended bottom of that triangle. So we pretty much blew through the top line that extended down, hit the extended bottom line twice, pulled back to this top line in what amounts to a back test. Then today opened over this red line. Now in yesterday's video I said that the chart says, and I'll reiterate it, the chart says we are probably going to stay in between these two lines. But there was something that just didn't quite rest with that, because this line is going up at such a slight pitch. It just seemed to me that even though we identified this as resistance and this as support, if you listen to yesterday's video, I was saying, I'd love to see this just blow up over that red line, but I couldn't really make that call because this line should be resistance. And so I was reluctant to make that call. But if you watch yesterday's video, you'll know that I was also not easy with the idea that this market's going to go sideways for a few weeks, because we still had the minimum target from this inverse head and shoulders. And I'll tell you what, I might as well pull it all the way down to that shadow now on that target. The reason why is because it made that today. So let this serve as another lesson in the predictable nature of these bottoming patterns, the inverse head and shoulders pattern. We've seen a bunch of them, and so far I think all of them have worked. I don't think there has been an inverse head and shoulders since March 9th of 2009 that has not done what we expect it to do. Now, of course, the question is, where now? That's always the question. Never mind the fact that when we got over 1288, we had the target of 1324 to 1326 in mind. The real issue is what happens next. Well, I can see a very strong likelihood that that this line right here will be attacked. That the validity of this line as support will get tested. Since we have made this minimum target, there is no underlying reason for us to feel very strongly that there is upside from this point on. But the fact that we're in a bull market tells me there very likely is. So I'm expecting probably a back test on this red line. If we bounce, then it's my feeling that we're going to get a serious test of the old high set back here in the middle of February rather, and we might as well snap a line on that. Where's my line? Just so we can keep an eye on this level right here at about 1344. So, additionally, I'm open to the idea, and I've mentioned this before too, though I'm not going to make this call yet. I'm open to the idea that that we may end up with this being a left shoulder ahead, and then maybe a right shoulder over here, setting us up for a nice move up. I'm not calling it yet because it hadn't happened yet. If this is going to be another inverse head and shoulders of the consolidation variety, it's not formed yet, so it's too early to make that call. For now, we look at this as some form of support, and we look at this as strong support. If this breaks and we come down and test this blue line again, then that is when I would look for the possibility of a good bounce on this line, and then heading back up, possibly to test what would at that point be a potential neckline in an inverse pattern. And while we're talking about it, and again I will remind you, this is a bit premature, so please, I'm not going to call this a head and shoulders yet, but let's go ahead and get prepared. Excuse me. Let's go ahead and get prepared and do our homework just in case it is, because if it is, the target from that pattern, if it were to develop, would be about 1410. So am I willing to call that yet? No, not yet. But does it look suspiciously like it could be developing? Could be. So anyway, that's the S&P 500. This little pattern did its thing. Now we just got to keep our eyes open and see what develops for a longer range indication of where things might go. And I'll remind you the fact that we're over this blue line right now, and that it's already been back tested once, I think bodes pretty well for the bullish case for this market continuing on up. Take care. Appreciate you watching this video. I hope that you get something out of these. And if you do, you can make a donation to my website there on the site at freechartvideos.com. If you do that, I will send you a video to help you hone your chart reading skills. I've got 5 or 6 charts that are very interesting. And I will also be preparing a new video here probably by either this weekend or the first of next week. Appreciate you watching again. And when you get a chance, please visit freechartvideos.com. I need your traffic to help keep it freechartvideos.com, because expensivechartvideos.com does not have a good sound to it. Take care, everybody.